This presentation is for Chapter 6, Variable Costing. In Learning Objective 1, we will learn to distinguish between variable and absorption costing. The purpose of managerial accounting is to provide managers with information that is useful for decision making, for planning and controlling decisions. In this chapter, two methods of determining the cost of producing products are discussed. Absorption costing is the product costing method that assigns direct materials, direct labor, variable manufacturing overhead, and fixed manufacturing overhead to products. It is required by GAAP for external reporting. On the other hand, variable costing is the product costing method that assigns only variable manufacturing costs to products, direct materials, direct labor, and variable manufacturing overhead. It is used for internal reporting. This exhibit summarizes the differences between absorption costing and variable costing. Key differences between the two methods are highlighted in green. Absorption costing is used for external reports, and variable costing is used for internal reports. Generally accepted accounting principles require the use of absorption costing. Absorption costing uses a traditional income statement, whereas variable costing uses a contribution margin income statement. So let's look at the differences between absorption and variable costing on the slide. The first difference we noticed is that fixed manufacturing overhead is included in the product cost under absorption costing, but not under variable costing. Under variable costing, fixed manufacturing overhead is considered to be a period cost. When we look at the two income statements, we see in the traditional format that cost of goods sold is subtracted from net sales revenue to determine gross profit. Cost of goods sold will be equal to the goods that were sold using product costing. So it will include fixed manufacturing overhead as well as direct materials, direct labor, and variable manufacturing overhead. After we subtract cost of goods sold for net sales revenue, we get gross profit. From that, all selling and administrative costs, both variable and fixed, are subtracted to get to operating income. When we look at the contribution margin format, we see that variable costs are subtracted from net sales revenue. That will be all variable costs, both manufacturing variable costs, which are direct materials, direct labor, and variable manufacturing overhead, but also the variable selling and administrative costs. Those will be subtracted to get to contribution margin. Then all fixed costs, both fixed manufacturing overhead as well as fixed selling and administrative costs, will be subtracted to determine operating income. This slide shows the information that we will be using in the chapter to explore unit product costs for Smart Touch learning. In this example, we are going to say that 2,000 products were produced, that the sales price was $500, and the direct materials, direct labor, and variable manufacturing overhead are shown on the slide. Fixed manufacturing overhead is shown as a total. We then see our selling and administrative costs with the variable selling and administrative costs per tablet and the total fixed selling and administrative costs per year. When we compare the unit product cost for the 2,000 products using absorption and variable costing, we can see that absorption costing will include the fixed manufacturing overhead. Per unit, we determine that by taking the total $111,000 and divide it by the total number of units produced, 2,000, and we get $55.50. So the total unit product cost under absorption costing is higher than the variable product cost by the $55.50. And that is the conclusion of the demonstration for Learning Objective 1.